Now back to markets and back to charts. Sterling touched the 10-week high today versus the dollar as expectations of further easing by the Bank of England fade following better than expected GDP data last week. Max Knudsen is a chief market strategist at ADS Securities, and he's looking at the charts for us today. Do you buy the pound dollar trade on the dips that we're seeing, Max?
Afternoon, Louisa, from sunny Abu Dhabi. I was on the program pretty much this time last week, and then I focused on the pound, as I am today. And my advice last week is the same as this week, and that was last week that I expected some initial weakness in the market, but investors to buy the pullback. And that occurred. That was very successful. Cable last week recorded the strongest improvement versus the dollar in 9 months trading. But that's just part of an ongoing trend in sentiment that's been in place for several weeks. And in fact, for me, in this chart I've got for you here, it started at very low in March. Now in March, cable made a low of 148.32. And the week of that low also coincided with a very strong recovery. And that formed a pattern of trading called a bullish engulfing signal. Very consistent with the end of a bear market and the start of a bull market. And let's not forget, at that point, cable had fallen nearly 10% from January's high. So a sell-off like that, followed by a signal called a bullish engulfing, gave me a very high probability of a big recovery. And the key target for that recovery was 156. So that's a 700 pip move. And the reason for that, Louisa, is that's a 50% recovery of all of the year's losses. Now that's been my target since pretty much the lows in March, and it's still my target this week. And if we flick to the next chart, I'll illustrate to you why I think we could do that this week. Now this next chart is a daily chart of the pound versus the dollar, and it shows two things. It shows the trend of rising lows as investors have been buying pullbacks, and it shows last week. It shows the test of the trend and investors buying the pullback, which is what I expected. And it also shows improving levels of momentum, and that's a sign that buying interest still remains strong. So yes, I think it is a buy this week with a target of 156. But given that we're so close to this 156 level, we're telling our clients here that this is really a trade just for a day or two, or even for the week. I'm not sure whether the market's got the ability to sustain gains much above 156. Yeah. And the reason for that is, let's not forget, the story of the UK is one of stagnation, Louisa, and sub-trend growth. That GDP figure was only 0.3 last week. Max, we have to leave it here, unfortunately, this time. Thank you very much. Look forward to talking to you very soon again. Max Knudsen, Chief Market Strategist at ADS Securities.